Turkey's lira hit a 6-month high against the dollar on Monday. It rallied 1% and was valued below 7 lira against the greenback for the first time since early August. It extended 3 months of gains after JPMorgan raised its expectations for Turkish economic growth to 4.6% this year. The currency has rallied more than 20% since a new central bank governor and finance minister were appointed in November. Turkey's central bank has since hiked the policy rate twice to 17% from 10.25%. It's expected to keep the rate steady when its Monetary Policy Committee meets on Thursday. Well, for more on this, let's bring in economist Taha Arvas, who joins us now from Istanbul. Great to have you back with us, Taha. Now, the lira, as I mentioned, has strengthened to below that key 7 to the dollar mark. It was approaching 9 just a few months ago. Can you tell us more about what's behind this latest rally in the currency?
Sure, Oscar. It's great to be here. So investors are, as you know, looking for returns, positive returns, and Turkey's current interest rates offer net positive real returns, and that's really the main driver here. But that's also coupled with investors' belief of who will best come out of this pandemic and who will best be poised to grow following vaccinations and a retreat from the pandemic era lockdowns. And investors appear to believe that Turkey is one of these countries, and as a result, we're having major investments in the Turkish lira, and that's one of the main reasons why it's rallying against the dollar here.
Now, Turkey's central bank has vowed to maintain tight monetary policy until inflation is at a desired level. We know they're aiming for it to drop below 10% by the year's end. Will high interest rates help to rein in inflation?
I think in the short term, they will. I think in the short term, as you see, there has been a rush to invest because like I said before, the interest rates in U.S. bonds and EU, European Central Bank bonds and European bonds in general are very, very low. So any interest rate that is above the inflation of a country practically will attract investment. So currently Turkey's interest rates and government bonds yield these amounts, and as a result, we see investment. So I don't see any reason for the current trend to stop, frankly, and I think we will have continued investment in Turkish debt instruments, and the Turkish lira will obviously, the demand will increase for that, and so we should see a continuation here of the current trends.
Now, how much of the progress towards bringing down inflation is tied to the continued reopening of the economy, which we can expect throughout the year?
Right. So Turkey's economy is dominated, much like the United States and other European countries, by consumer consumption. And while during the first days of the pandemic, there was a slowdown in that consumption, we saw it pick up, and it robustly pick up towards the end of 2020. Towards the middle and end of 2020, and we see that continuing in 2021. So as long as consumers have a positive outlook on the future of the country and growth in the country, then they will continue to spend. As long as consumer confidence is high, then consumer consumption is up and the economy in general does well. And that obviously leads to more investments, and it's just a cycle that will continue to help improve the economy here.
Okay, Taha Arvas, a pleasure to have you on as always. Thank you for that.